the physical markets are now beginning to negate the paper markets. Go back to October, November of last year, and that's when the moves in the metals started, and they really went into gear the end of February, early March. That in gold, the big buyer has been China. You're also seeing pretty good buying out of Europe. In silver, the huge buying is coming out of India. And both metals got pretty overbought in early mid-April. We had a pretty good, decent-sized pullback. The prices relaxed, and the gold nor silver were overbought. And then just in the last a week and a half or so, you started to see some strength. And I picked up on the article that I posted. I posted 3 charts: gold, silver, and the miners. I used the HUI index. And what you'll see is that the HUI has gotten to the point of close to breakout. It's breaking out at this point. Over 275 is a breakout. Obviously, over silver is a breakout. And those aren't new highs until we get to $50. But there's really nothing on the chart between $30 and $50. So once we get over 30, I think 30 is going to become the floor. And you probably, I'm guessing within 3 to 6 months' time, you'll see $50 in silver. And of course, gold is again pushing up against 2,400. Over 24, 25 is a new high. If you look at the charts that I posted, you can see on the very bottom of the chart, you see the MACD, that's the moving average convergence divergence. And if you look at the very current time, you'll see on all 3 charts, you'll see a hook that's forming, and the HUI and silver have crossed over, and gold is lagging just a little. The hook is not fully completed, but we've got a crossover in silver and the HUI, and that's going to create momentum buying in silver, gold, and the HUI, and that'll push these things into new highs. Yes, we're going to see huge volatility, but the paper markets no longer rule the price as they have in the past.
And you've mentioned how what we're seeing right now is not so much a move upward in the metals, but a move downward in fiat currencies. And this is really signaling that fiat currencies are collapsing. Can you expand on that?
Yeah. An ounce of gold or an ounce of silver that was mined 100 years ago, 200 years ago, 1,000 years ago is still only an ounce of gold. Nothing changed. It doesn't go up. It doesn't go down. It just is. What changes is the value of the currencies. And watching gold, silver, and even the cost of a cup of coffee going higher is a function of the fiat currencies losing purchasing power.
Now, obviously, we can't give financial advice on this channel, but your personal perspective on where we are in the metals markets, if people are looking for a pullback or they're not sure they want to buy at these, higher prices than we've seen in the last couple of years, what do you say to those people who are waiting?
Good luck. Good luck with that thought process. The reason I say that is, just look around you. There is a vast reset from west to east happening. And once that happens, you're either in silver and gold or you're out, and you won't have the ability to get in. So if you think these prices are high, wait 3 months, 6 months, a year. If were China to revalue their gold, and the way to describe that, not revalue gold, but devalue their currency, that's going to price the metal. So if you're trying to time this, good luck with it. I think that's a foolish move.
And you do mention how really the physical market is taking over. Can you kind of explain for our viewers how the paper market and not the physical metal has been in control of the price for so long now?
Yeah, the center of the financial world for years and years has been New York and been London. And you've got the COMEX in New York, you've got the LME in London, and those paper contracts are what, for years and years, have priced the metal. Fast forward to where we are now, and what you've got is a premium of $2 to $3 in silver and $30 to $50 or more in gold, Shanghai over the Western prices. So what's happening is you're getting buying in the West, demanding delivery, and then that metal gets shipped to China, and it's an automatic. You're locking in a profit as soon as you buy the metal. You buy the metal, you sell the metal at the same time, then you deliver it, and you book the profit. So metal is being bled from west to east. And if you're a student of history at all, power flows with money, and money is gold.
We do have quite a few viewers' questions here on the precious metal markets. I guess we'll start with this one from Kathleen. If gold and silver hit their peaks and you sell, what will you do with the dollars or other currency that you sell gold and silver for?
Yeah, that's a good question. And the answer is you're not going to sell gold or silver until there's a currency that you can trust, until there's a place for you to put your money. But we're nowhere near that. We're nowhere near a peak, so to speak. The peak pricing in gold and silver will be, if you want to call it, the bottom pricing on fiat. And fiat ultimately can go to zero. So the inverse of zero is infinity. So I guess my answer is, I would answer the question with the same question: where would you put the money? And if there's no place to put the money, then why would you get out of gold or silver, which you know cannot bankrupt? It can't be devalued. So you sit with the metal until you find a currency that you can trust.
I think that's very interesting, because if fiat currencies go to zero, then precious metals go to infinity, right?
And so does a cup of coffee. I mean, everything will go to infinity.
It might be hard to answer that question of what are you going to do with the metals, because we don't even know what kind of monetary system we're going to have after this one collapses.
Right.
Now, moving on here, we do have a question from Matt about the gold-silver ratio. And I guess this is kind of along similar lines. Well, what do you do with the metals when they become overvalued? But there is a very good case to be made that silver is much more undervalued than gold right now, given the gold and silver ratio being about 80 to 1 right now. And that if that ratio decreases, then you could swap silver for gold. Your perspective on that?
Yeah, I mean, I've been talking about the ratio trade for years and years. Silver is way undervalued to gold. And I urge people to overweight in silver. And at a later date, as the ratio comes down, I mean, here we are at 80. If the ratio came down to 40, that would mean silver doubled the performance of gold. And if you swapped silver for gold at a 40 ratio, you'd end up with twice as many gold ounces than if you just bought them outright today. So you'd be buying gold with you'd be buying less expensive gold with more expensive silver, and you'd end up with more gold.
And can you detail this for our viewers a bit more in detail, why you think that silver is so undervalued right now? I mean, obviously, as we talked about the beginning of this interview, how silver is likely to move to $50 given where the chart is. So that's a significant move from where it is right now and almost doubling. So it seems like the upside potential is much greater for silver. But as for just the fundamentals and not the technicals, what are some of the main reasons you see silver being so undervalued right now?
There's really only one reason, and that's God. You know, God made the metals in the crust, and He made there's 10 ounces of silver for every 1 ounce of gold. So that's God's ratio, 10 to 1, and man's ratio is 80 to 1. One of them is right and one of them is wrong, and I would bet on God rather than man.
That's a very good point there. We do have many viewers' questions about pre-33 gold, and it is interesting how the premiums on pre-33 gold are it's very similar to if you just buy bullion coins right now. So it seems like a good time to maybe move into those coins. I guess, can you give your broad overview again for our viewers about pre-33 coins? There's questions about confiscation. Are they less likely to be confiscated? Your take.
Yeah, pre-33 gold. I mean, in law, they are considered collectibles. And if there was a confiscation of bullion, those would not be affected because they're not bullion, they're collectibles. Going one notch down the totem pole would be eagles. Those should give you some protection against confiscation, because it would be very difficult for the mint to sell you an eagle today and then next week demand that you sell it back to them. They did it in 1933-34, and it was they could do it because it was the money of the realm. But gold eagles today are not the money of the realm. Gold eagles are sold to the public by the mint. And they really turn around and say, oh, well, we sold it to you, but you can't have it. So as far as a confiscation of gold is concerned, your safest holding as an American would be a pre-33 gold. The next safest would be eagles. And on the topic of confiscation, the U.S. and Canada are considered the safest havens for mining projects. And I would suggest that if we do go through a confiscation, I am not so sure they're going to confiscate the individual coins. I think what they'll do is they'll nationalize the mines, because that's the raw supply and there's more of it.
In that case, do you see a major risk in owning mining stocks?
Well, yeah, I think there is risk in owning North American mining stocks, but they're so beat up across the board. A well-diversified geographically portfolio of miners should do very well. Should do even better than silver, because there is operating leverage. And we could spend an hour talking about this, but yeah, there's more leverage in the miners than there is in anything else.